Hi guys, welcome back to another video. If you're new here, my name is Nicole. I'm a local realtor in the state of Rhode Island and Massachusetts, and I am sitting with Mendez with Semper Home Loans.
Hello.
So we're going to go over some questions that you guys gave us over the past couple of weeks, the home buying process, where the market's headed, interest rates, and all that. Just going to jump right into it.
Thanks, Nicole. Thank you for having me.
Of course.
I'm excited to be on your page and see your viewers and give some knowledge today.
Absolutely. I'm so happy to have you here. You know, you're one of the best in the business. Even though you are new, you're absolutely crushing it. So that's why I wanted to have you here today.
Great. I have a great team. So I work with Semper Home Loans. They're based out of Providence and Warwick, Rhode Island here. So we're nice and local. I am a Rhode Islander, grew up in Rhode Island my whole life. Worked a little bit in Boston, so I'm familiar with the Massachusetts area as well. Not that it's far for us New Englanders. It's like right over. Stone's throw away. So I work in Warwick, but I kind of travel around and I help my agents in this area. I love working with the Crin Group. They have a great team there. So I would love to help understand the home buying process with us and understanding that finances and pre-approval process is not a scary thing. That's my biggest thing, is that I came from education before this, and I like educating people and understanding and being more of a mortgage advisor versus a lender.
Which I think is super beneficial in helping, especially first-time home buyers who have a lot of questions and they're new into the whole home buying process. They don't know what to expect, especially with the type of market that we're in right now. So that's awesome.
Yeah, having a great team between the realtor and the lender, that's what their job is to do. That's what our job is to do, is to make sure you feel comfortable, keep the nerves down, and understand everything that you're getting into, because it's a big purchase.
Absolutely. It's one of the biggest purchases of their lives.
Yeah, of course.
Biggest investment, biggest purchase, absolutely.
And it is an investment. It's a good point that you mentioned that.
Yeah,
too, so
absolutely.
Yeah.
So let's go ahead and dive into the first question that we got, which is specifically for a loan officer. So what is the first thing someone should know when talking to a lender?
So when talking to a lender or having that topic come up, usually it's scary because you're talking about your finances and maybe, you know, I know myself, for me, when I was getting to my first home, credit was the scariest thing for me. But don't look at your mortgage, your loan officer as the end-all be-all person that's going to judge you or put you in a certain mold. What they really are is not only your advisor, but they're your advocate. So don't be afraid of talking to a lender. Their job is to gather all the information and collect it so they can structure the best program for you. So they're not scary people. They're your advisors. They'll help you get into that first home and then also make sure you're comfortable to move into future purchases later on down the road. And if you need a little bit of time to get to that first home, they're not just there to say, okay, you can't get into a home now. They're there to help you get to that home eventually, whether it takes 1, 2, 3 months or even 6 months. They're there to also get you to that point to be ready as well.
And you mentioned a big thing, which is obviously credit. So if you have a first-time home buyer or just anyone looking to purchase a home, if they look at, like, say, Credit Karma or any of those types of credit online apps, is that credit score that they're given on there, is that kind of similar to what you guys would pull when you pull their credit?
A lot of the times those websites are good and they're good resources to have, but they're not always the best to be completely reliant on. So a lending company or a direct lender like myself is going to pull a full government-backed report, which is going to be a little bit, usually between 30 to 40, even sometimes 40 points off from what you'll see on Credit Karma or any other sites like that. They're good to have a temperature check on your credit report, but don't feel like that's going to be the same number that your lender is going to pull. Another thing to keep in mind too, when your lender does pull your credit, they do that to understand and make sure they're going to give you the best, all the information as best as possible. If we don't have that credit report number, we're just throwing out an estimate to you, which I don't do. I always like, for my own personal clients and to make sure my realtor partners feel confident, we like to get that information from exact information, and we also only pull it once. So sometimes you can think, like, I used to think that it was the same as going to shop for a car and they pull it like 6 or 7 times. We're the lender, so we're just going to do it that one time, and we're going to protect your information so you don't get spammed as well. So it's not the same process as doing anything else, like car shopping or anything like that.
So what would you tell to the people, because I've had quite a few buyers who they want to get pre-approved, but they don't want to get their credit pulled right away because they're afraid that it's going to drop their credit getting it pulled right then and there, because is it considered a hard inquiry or is it a soft inquiry? And does it affect their credit when they do get it pulled right away?
In the larger scheme of things, that is a big fear for everyone. I run into that a lot. In the larger scheme of things, it is going to be a hard inquiry, but it's one hard inquiry, and it's going to be ranging between 3 to 5 point deduction. It's not going to be anything that's going to drop you out of qualification at any other future lending or financing availability. And when we do that report, we see everything as well too. So it pulls up all of your accounts, histories. It even pulls up information of your residencies. It checks where you've lived and everything. So you want to have all of that information. If we don't pull the credit, we can't give we never give a pre-approval off of that. And for how this market is, and especially on the realtor side of things, how fast it is. When you see a home, you want to be ready to put that offer in,
right?
And you can't put that offer in without the pre-approval. So it is a hard inquiry, but it's in the grand scheme of things, it's not going to be anything detrimental to your credit score.
Right. And that's what I heard as well too. I heard it. I mean, it may affect it by like a point or two, but at the end of the day, you get that back within that month anyway. So by the time that you actually close on that house, and essentially putting a mortgage on your credit report, doesn't it actually help your credit? So once that actually hits your credit, doesn't actually help it go up? Yeah,
it shows that you're a solid borrower that has the ability to finance that, and having that loan on your report and making those payments in the future on time and regularly is going to just increase your score from there.
Awesome. So besides from credit, what other documents do you as a loan officer get from these buyers who are looking to get pre-approved?
Yeah, so you want to think about it as I do like a 3-triangle reference. It's liabilities, which will come up on the credit report. It's what you have coming in for income as a borrower, and then what you have already saved up as assets. So a little analogy I use, putting it all together is pail. So think of like a pail of bucket that you're gonna bring to your lender. And that P standing for the pay stub. So you want 2 most recent pay stubs, and that shows us a history of your income coming in. Make sure that you have employment history and still continuously will have an employment coming in. That's what the banks are looking for, is you have a job and you continue to have a job. A for the assets, so what bank statements you have, and that's everything. And you don't want to just think just your checking account. You want to go checking, savings, if you have a retirement account, investment accounts. ID stands for the I, so we want to verify who you are. And then you have the credit report, and all that together paints us a picture, and we kind of go from there. And having those documents in there, we not only analyze what's on the documents to structure you into the right program, but sometimes we can find out even from a pay stub that someone has a 401k. And for 401ks, you can borrow for your primary residence without any penalties on it too. So,
oh, really?
Yeah.
That's awesome.
Yep, exposes some more information as far as the lending side. So when it comes to buying power, assets have been really helpful. And you're just moving it over from one type of investment to another type of investment.
Well, that's very good to know, because I'm sure a lot of people out there who, they've been in the same company for a long time, they have a very good 401k, and so that's a huge benefit.
So sometimes a lot of my buyers don't even realize they had that much, and they can even utilize that as well too, instead of just having it.
That's really good to know. So I know all loan officers are different as far as how quickly the process can go, but if you have a buyer who gives you all the documents right away, they give you, you can run the credit, they give you the permission to run the credit, they give you all the documents they need. From that time, how long does it take to actually push out that pre-approval to them? Not too much time at all. You'll actually have a very happy loan officer, because we make the process smoother for everybody, even when it comes to the realtor as well too. So once the application is complete, if you're ready with all your documents and you submit those in, we tell our borrowers within 24 to 48 hours you're going to get a response. Oh, that's good. Yeah, you'll get an answer. I personally, my process is I initially will do a phone call, so I can give them the good news over the phone and share the information and make sure they understand it, and then I'll send that pre-approval email with the pre-approval attached to it, and it'll include all the parties involved, the whole team, so the realtor, borrowers. I have a loan officer assistant who helps gather and helps us stay on top of all the document collection and make sure everything's organized and ready to go. So instead of just getting that email right from the beginning and not knowing what you're reading, I do that initial call so they understand what's coming ahead and what they're going to see in the email. And that comes up with a very good point of why it's very important to have a local loan officer or a local lender that you use in the pre-approval process. And that's like another big point that I want to touch base with, because I have a lot of buyers who do come to me with pre-approvals from different companies, such as online companies, you know, like Lending Tree, Quicken Loans, and all the like the apps that they can just put in their information and then they get that pre-approval right away, and they don't really know who they were dealing with, or you know, I personally don't even think half the time they're actually pre-approved for the amount that pre-approval came through as, because they're not actually looking at all the documents. So I always, as a realtor, always try to have my buyers go to local loan officers within like the state, or you know, where New England, or wherever they're licensed, if they're, you know, licensed in Rhode Island, Massachusetts, and whatever. But I always tell my buyers how beneficial it is, especially in this market too, because the pre-approvals actually look a lot better as far as standpoint of competing against a lot of other offers out there and other pre-approvals, because obviously in this market, even though we are going through a little bit of a shift, they are competing against other offers. So I think it's very beneficial to have a pre-approval with a local loan officer, and also a reputable loan officer too, because you probably work with a lot of other agents that I could have a buyer for that I'm putting in that offer, and they've already worked with you before, so they're going to be more prone to, you know, advocating for my client and my offer, because they know how you work. So you want to touch a little bit of the difference between working with like a local loan officer compared to, you know, a national company or online app, or
a lot of points where, you know, you made that are really important. Local for the purposes of understanding the area. One of the factors, one of the components that's in a mortgage payment is your taxes. So when you have a local lender, they'll understand the different towns and how those tax rates change, and they're going to affect that monthly payment for you. So they understand, because they're familiar with the area, versus someone that's looking at this from out of state and all the way in California, and they don't know the difference between North Providence or Warwick and stuff like that.
And there's also that time difference too. And for you, I know, you know, you work on the weekend, so if I ever text you on a Saturday because I need either an updated pre-approval, or I just have a question, or my buyer has a question about putting in an offer, you're right there to answer. Whereas if they're trying to get in touch with someone from California, you know, they're 3 hours behind, so it could be like 5 a.m. for them, or they don't work weekends. So that's another huge a huge thing about using a local loan officer when getting pre-approved and work with.
In your area, they're there, they understand the time zone, they understand the market and what's going on, as far as if you are going to that open houses and you want to be able to talk about putting that offer in, they're going to be able to answer right away and give you some guidance in that offer as well too, and helping them get to that point.
Because I do have a lot of buyers who, you know, they want to know so we're looking at a house, or an open house, so to say, and you know, obviously, if there's a bunch of people at this open house, they want to know what the highest is that they can go in at on this house, based on the taxes, based on insurance, and you know, all the other factors, based on what the interest rate is right then and there. So I always have my buyers reach out to the loan officer and have them say either, you know, hey, what's the highest I can go to if I want to pay $2,500 a month for this house, or what is my max approval on this house? You know, if I go in at $375, what is going to be my monthly payment, which I think is super beneficial for buyers, because they're really more or less worried about that monthly payment, because that's essentially what they really do have to worry about, is that monthly payment.
That's what you have to worry about in that day-to-day, and once you're in the home, making sure it's comfortable enough for you, and when you go to make that offer, you want to have that information ahead of time as well. And it's a team effort when it comes to this whole process, so the more available and as a team cohesively you work together, the better the process is.
Absolutely.
And I liked also to the point you made about a local lender knows other agents and has that ability to be able to help make the process easier too, if it's someone that I've worked with in the past that you're putting an offer in for the buyer with. They understand how my company has the process, our turnaround time for the closing period. They get that because they were local and they possibly have worked with us in the past.
Right. And another thing too is that a lot of local loan officers, as yourself, like you would actually reach out to these agents. So if I put in an offer that you are pre-approved that buyer for, you know, I could reach out to you and say, hey, can you actually just contact this listing agent and just kind of advocate for our client, because obviously we all have the same end goal here. I want to get my offer accepted, and we all want to have we all want it to close at the end of the day. We want the buyers to be happy, and we all want to be at that closing table
Yeah.
eventually.
Uh-huh.
So, we're all advocating for the same client here. So that's what I also think is really good, because then you put more, I just feel like it's more personable when you can actually call that listing agent and talk about that buyer and talk about their financing, and rather than having someone who doesn't really know that buyer, they just put in their information on the computer and they popped out that pre-approval. They don't really know much, so they're not going to go ahead and call that listing agent, and it's probably very difficult to get in touch with them too, to have them call that listing agent anyways.
It's very
so
true.
that's another huge benefit of using someone local, I think.
Yeah, even I went actually just yesterday. We give a live scenario. Is that I had a borrower of mine put an offer in on a listing, and the agent is someone that I've met at another office, and I'm in an office one day a week, and we've seen each other and talked there. So making that call and advocating for my buyer was so much smoother, because we had a face, and you want to work with people, not just paper and transactions.
Right.
So it makes it more personal, like you said.
Absolutely, I 100% agree with that.
Another point about working with a local lender and a local, let's say even human lender, is sometimes there's so much on the internet available to us. It's like clicks away or touches away. So you might get roped into just doing something online, and an online pre-qualification or pre-approval is only going to look at something just as face value and automated populated. So for example, like your credit report. When you have a local lender that's a human analyzing it, they're going to be able to see things and differentiate what information is on there versus something that's just done online and it's automated for you, like a robot. So a credit reports, a lot of the time, some people add self-reported accounts, like electricity bills or gas bills, to build their credit. But those factors of those bills don't actually get counted towards your DTI when it comes to pre-approving. So it doesn't mean that if you put that, if an online robot looks at your credit report, they're going to count that as a liability. But when you have a human local lender, they're going to be able to analyze that and be able to take that into account and potentially even make your buying power stronger.
Because you'll use the minimum monthly payment of credit cards rather than that full amount that they owe towards to basically pay it off.
Yeah, exactly. And speaking of credit cards, even sometimes there's different credit cards agencies, for example, American Express, that actually sometimes on their credit report for the monthly balance, they'll show the whole balance of the card. And if that whole balance is $2,000 and that gets reported as the monthly balance, that's going to be a big factor into your debt to income ratio, which is going to qualify you for your home buying purchase. So a human's going to be able to detect that a lot more than something that's automated online.
And I also think another good point is that, because I've had buyers like this before, where one of their credit cards could be potentially putting them over that debt to income, where you could look at that and see what they have, saved up in their savings, or the money that they have, and you can tell them, hey, if you pay off or pay this down to X amount of dollars, that will actually help your debt to income, and now you can be pre-approved for X amount of dollars.
Exactly.
So you can actually analyze it, like you said, a lot better than just an online company just looking at it as a whole and saying basically yes or no.
Yeah, it can be a difference of maybe even $100,000 of being able to have a local in-person lender look at that and like you said, Nicole, like knowing that they have the assets and that credit card is playing a big factor in what their buying power might be. We can have the conversation. We can say, I can explain those options for you of using those assets towards that to give you more buying power. It's like a puzzle. So like I was saying in the beginning, that you want to share all of your information and don't feel like they're there to judge you or anything. The more information that we have, the better we can kind of put the puzzle together. It's like we're puzzle people.
Because it's not really just black and white as far as being yes or no, if you're pre-approved or not pre-approved. There's a lot, I feel, and obviously I'm not on that end of it, but I feel that there's a lot that goes into it, and like you said, it's a lot of moving parts, and there's different ways, I think, to like finagle things to, make it work for a buyer in their best interest, because it's essentially what you're trying to do.
Yeah, it is for their best interest for the current moment and for long term too. So you having that lender that's going to explain to you everything on the credit report or everything of the whole aspect of your assets, your income. You can learn things about your income from your lender, and that you can plan for the future. Once you're in that home, you know how to manage your your finances from every aspect, including your mortgage and for future endeavors. So it just empowers you to have that understanding when you have someone that explains it to you as a person.
Oh yeah, because it can definitely be a lot.
Yeah.
And I know purchasing my first home, I was new into being a real estate agent, even though I was a paralegal before, but buying my first home and getting into like the whole like financing part of it, like sending over all my documents and stuff, I was like, oh wow, I'm like, I didn't know what I was getting myself into. But if you have somebody good on the other end to actually explain everything to you and guide you down the right path, it does make a huge difference, and it does make that home buying process a lot less stressful and just and fun, actually. I think it could be fun, because a lot of people think in this market it's just very stressful. But it doesn't have to be.
No, it doesn't have to be. It's fun when you understand it and you see how investing into the real estate, whether be just being for your primary or being for future investments after that, when you understand that, you have that freedom to be like, okay, I get it, and and you see more options available to you when you understand that process, because you have a lender and a realtor that just was transparent, and they explained it and guided you the right way.
Yes, real estate is one of the best investments.
Very true. You also pair people with personality too.
Yes.
So when someone's far away, you might not know how their personality is, and you want to work with people, your realtor, your lender, that get you and you feel comfortable working with, and feel that you have similarities, or just be easy to talk to. So that's awesome.
And I believe that you attract people that kind of click with your personality, because I feel like a lot of my buyers and even sellers that I work with, we're very similar in some ways. And I mean, for instance, for you, like I represented you selling and buying a house, and I feel like and now look at us, we're doing a video together, and it's like, and we talk all the time now, and so it's just like funny how you actually connect with people who you just you have similarities with, and and a lot of my clients actually become like lifelong friends of mine, which I think is pretty awesome. So
exactly, and 100% agree.
And then obviously you have like your the people that you're super close with and that trust you, and then they refer you to other people as well, and then it just kind of just becomes like a trickle effect from there.
Yeah, exactly. And then you grow and you understand more of the process as well too. So from a borrower standpoint, if you have that team built when you get into your first home, when you are going through, that team stays with you. Nicole, I always feel, not only from a partner standpoint and a professional level, but as my prior representing agent, I always can go to her for our next purchase or understanding, or if we're thinking about a different type of property. So when you understand, when the team works together and we understand what your goals are, and when my realtor understands what my goals are, you'll always stay and have that relationship with them.
Yes, and that's why I 100% agree with that, and that's why I feel like this business, like I said, it's just it's not always, I mean, I feel like a lot of people have this stigma on like realtors and loan officers that all we want to do is close a deal at the end of the day to walk away with that commission check. And for me, that's not me. That's never been who I am. I personally just enjoy helping people reach that end goal. And I used to love doing that with fitness, and then I changed that into real estate, and same with you. You were an educator before, and now you're educating people on their finances and helping them choose the best investment for them. And so we come from different types of different things prior to being in the real estate market, but it kind of all aligns together. And I feel like that's what's going to make or break a lot of people in this business, is that I, like you yourself and myself, like we always just want that end goal, because I'm actually genuinely happy for my buyers or sellers at the end of the day when they get a good deal on a house and they close on that dream house of theirs, or they walk away with amazing equity and proceeds from selling their property, and they're happy with the service that we gave them, and then they're just going to keep either using you for down the line, or they're going to refer you to friends and family, and that's just kind of how you grow your business in this field.
It's true. It's so much. And how I even, coming from education and getting, even as a loan officer myself, getting into this, I got into this because I was getting into my own first home was such an amazing experience for me, and so empowering to feel like I have my own first home. And I'm single and on my own getting into it, so to feel that confidence boost getting into my first house and having that just it gave me so much more ability, and I want to share that with others, and that's why that your loan officer is not just someone, they're not the person they're not the bank that's gonna say yay or nay, you know, they're the ones that are gonna be advocating for you to get you into that purchase and educate you, and then also empower you for your financial goals and for the current moment and for the future. So,
yeah.
I
feel like they're like the cheerleaders behind the scenes, like pushing you to getting you to like the I'm trying to put a football reference in right now.
Yeah, goal. What is
goal?
that thing?
I don't know. A touchdown.
Tell we're not watching that. Yep.
There's gonna be people that are like so into sports, but like, really, guys?
That was horrible.
Sorry. I like to watch it, but I don't really understand it.
Pretty much.
So one thing I really want to dive into is obviously where the interest rates are headed, because that's a very scary thing for buyers right now. Well, it was what they think is a very scary thing. We're here to basically debunk that for you, for the buyers out there that are thinking the interest rates are through the roof and it's not a good time to buy. When in reality, I still think it's a great time to buy. I also think it's a very great time to sell. So I want to touch a little bit on what about the interest rates, where you think they're headed. Should buyers wait? Should they keep going forward? What do you think?
Yeah, well, there's a lot of content out there, and there's a lot of interest rate talk, with whether you go on Instagram or you turn on the TV, it's kind of everywhere. The best thing, no one ever can predict exactly the future. I'd be a millionaire if I could. We all would be, but we can at least take all that little bits of information. And what's going on in our industry is that, yes, they did go up, but it's for the larger picture to hopefully try to level things off a little bit. That's what we're hearing a lot, that it is going up. It's still historically low. It's not as in the double-digit interest rates that we've seen in the past, that maybe our parents, or I even researched from when my birthday all the way up until now, and we were to double the interest rates that we're at now, just 30 years ago. So it's going up, but it doesn't mean it's going up forever either. We have seen crazy high home prices the past few years, and this could be what maybe is possibly needed to level things off a little bit. It doesn't exactly mean crash either. It just means to shift the market around, to change up how the market has been going on. One thing that I always remind my buyers as well too is that when you're getting into that first home, even though interest rates are a big topic right now, you don't marry the interest rate, you marry the purchase price. And getting into real estate appreciation, and the realtor partners know this a lot more, they're more their warehouse, trajectory always shows it increasing, usually over history. So as that price continues to rise over the next 1, 2, 3 years, if you're feeling or that you're hearing that it's better off to wait because the rates have gone up, that price is going to continue to go up.
Right.
There's always future options in the near future that if you could refinance, and when rates do drop down, those are options for you. So the rate can be played around with. That home price isn't going to.
You're locked into that.
Yeah, you marry the price.
And you made a good point about values going up. I mean, we saw a crazy increase of values within the last year, which is unheard of. We haven't had a market like that at all. It's not a reality. Like, that's just not typical, and right now, I mean, we're still going to see values go up because supply and demand still play into effect, where we still have a very low supply, and a 6% interest rate isn't going to knock out all of the buyers. There's still buyers out there looking, so that demand is still there. So I don't think we're going to see a crazy increase of values as we did last year, but values are still going to go up maybe by 1-2%, which is typical, which is a normal market, which I think is a lot better than what we had seen, because it was kind of just it was just chaos last year. Yeah. Because of the low interest rates and the high values, so all the buyers wanted to take advantage of that low interest rate, and all the buyers wanted to take advantage of the increased equity that they've gained within just 1 year. I know people that had their house for 2 years and they sold it and they walked away with a big chunk of change in their pocket. Yep. But in reality, I don't think that for the buyers, it was very tough for buyers to get in, because when I was putting in offers, we were going $30,000, $40,000, $50,000, $60,000, even $70,000 over asking, doing appraisal gaps of $10,000, $20,000, waiving inspections, and it's sad to actually put buyers into a situation like that, because just to get them into that house with that high price point, just because the interest rate is so low. Yeah. Where in reality, I think right now, with the interest rates being so high, we've seen a little bit of a shift in the market where I'm not going $20, $30, $40,000 over asking anymore. My listings may have 1 or 2 offers on them at ask, at listing price. So even though the interest rates are higher, these buyers aren't spending a lot more money to get their offer accepted. They're just going at list price. So essentially they're paying less, if not the same amount they would if interest rates were lower at a higher price point.
Agreed. It's so true. And as we've been talking about your team, lender, and realtor being your advocates, we want to make sure that you're getting into the right, your right situation, and it's beneficial for you. And going $20, $30, $40, $50,000 over asking price, that's extra money that you could have in your pocket, going into that home, using for repair. So it's not, ideally it's not the best situation. It's some obviously have had to do it in the past few years and have the ability to do it, thankfully. But with rates going up, and those, as Nicole mentioned, those over asking prices going down or being a little bit less, for you, for the consumer as a buyer, you're going to have that money in your pocket. And yes, you might be paying that little bit more of an interest rate, and just kind of comparing, from someone who is buying, going $45,000 over asking price, but getting a 3% interest rate, versus someone that's not going in $45,000 over asking price, but getting a 5 or a 6% interest rate. That monthly payment is maybe $400 or $500 difference. So being $400 or $500 more with the higher interest rate, but you're not spending that $45,000 in that purchase price that you're never going to get back.
Right.
And doing some math out, if you take that $45,000 and divide it by 500, that might take you 2-3 years to be able to recoup that $45,000. So yes, you're paying a little bit higher of an interest rate and a little bit more in your mortgage payment, but that big, to me, I'd rather save that $45,000.
I'd rather say that. I'd rather have that $45,000 in my pocket, because like you said, you could refinance once the rates drop a little bit. Even if they go back down to 5%, say, you can refinance, and then there you go.
Yep.
And that $45,000 too, that can actually help buyers potentially maybe put down 20% that they wouldn't have been able to put down on that extra $45,000.
Agreed.
So now, they're saving the PMI, so their mortgage can actually be a lot cheaper than if they had to put in that extra money.
Yeah, the money they could have spent, they would have spent in the over asking. That's a great point of mentioning it, to put more into the down payment. It's going to make another component of your mortgage payment is your monthly PMI, mortgage interest, and mortgage insurance, and that could eventually just level out interest versus the PMI.
Yeah. Yeah. So I think personally, I don't know about you, but I like this market a little bit better. I think it is, and I think it's going to, I think with the interest rates rising, it's definitely going to stabilize the market a little bit, and it's going to be more realistic for buyers and sellers.
Yeah.
And it might be a little bit harder. I mean, I think what's going to happen is that listings aren't going to take 2 days to sell. They're going to maybe take 1 to 2 months.
Yeah.
And they're not going to be having 300 offers on that property. They may have 1 to 2, which I think presenting 20 offers to a seller is actually a little overwhelming, because all these realtors, and I obviously did it myself, you have to get very creative with your offer. So you're, there's the appraisal gaps, there's the interest, the inspections for informational purposes only, or people even waiving inspections, which I personally I can't do. I can't have my buyer waive an inspection, because God forbid, I don't want to put them in a house where there could be something wrong with that house. You never ever know. And I've had situations where we had to walk away from houses because there was just nothing we probably could have done to get it into an actual structurally sound home.
Yeah.
So it's like, you don't know what you're walking into when you're waiving those inspections. And I just think it's going to be more of a neutral market, and buyers and sellers are still going to benefit from it. So overall, despite of the rates, despite of what people may think about the market, personally, I still think it's a very good time to buy or sell real estate. And to look back, when we had the worst market, which was the recession of 08-09, there were still 4.5 million real estate transactions that went on during the absolute worst market. And during the best market, which would be, last year, 2021, we had 6.9 million. So the numbers aren't really that far off compared to when it was the worst market that we've ever been through, compared to one of the best markets that we've been in. So it's not like we're going to drop to 0 sales.
True. It's so true.
So
Yeah.
I mean, people still need to buy, people still need to sell. Yeah, we may go down a little bit as far as sales. I would say maybe from 6.9 to maybe 5.5, 5.8 million, but nothing crazy.
No,
I
it's
mean-
still very comfortable. I mean, even knowing that I never knew that information, that's not far off at all. And it's still, you know, very doable to have a good, healthy, profitable market and get people into homes.
Yeah.
Yeah,
Yep.
absolutely.
So yeah, well, I think that hopefully answers a lot of your questions, you know, about the market, where the market's heading, interest rates, and all of that. So yeah, I really appreciate you coming
Thank
and
you.
answering a lot of the questions, you know, and hopefully you guys got some good information from this video.
Hopefully I shared on the lending side some good information so you feel confident in the process.
Absolutely. And if you're in the Rhode Island or Massachusetts area, or what areas do you service?
So I service Rhode Island and Massachusetts, but my company is licensed in 42 states, so we can kind of always navigate you to other available options for you.
Awesome. Well, you heard it, guys. If you have any other questions, I will link her information below. So if you have any questions about financing or wanting to get pre-approved, feel free to reach out to her. And then also, as always, feel free to reach out to me if you're looking to buy or sell in Rhode Island or Massachusetts. Thank you guys so much, and thank you so much for coming.
Thank you. Thank you.